Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Monday, October 13th, 2014, and we're going to take a look at the market action today, and then we're going to look at four stocks real quick: Pandora, YELP, YAHOO, and Yandex. Okay, first of all, I want to wish a happy Thanksgiving to all my Canadian subscribers and followers from up north. Hope you're having a wonderful holiday. It's a great time for getting together with family, and it's just a great holiday. It's one of my favorite holidays, and of course ours is a little later here in November. But anyway, hope you're having a great one today. So today the Dow was down 233 points, and it happened most of it in the afternoon after going sideways during the day. I've adjusted the little, you'll see the little counts I have in here. The counts are the same in terms of 1, 2, 1, 2, 1, 2, 1, 2. Now we're getting a 3. I really think if we're not at the end of 3, this square bracketed 3 I've got in here, I've got names for them, but they're not going to mean anything to you. If we're not to the end of this, we're very, very close. Okay, so now I'm expecting a little fourth wave, which could be nothing more than just a sideways, because this was a sharp pullback. Okay, so typically the corrective waves like 2 and 4 alternate. So when you get a sharp rally pullback like this, I'm expecting more of a sideways, and it may last only a day or two. We'll have to watch and see what develops. But once we get that little 4, then we're going to get a fifth wave down. Okay, then that's going to actually give us 5 waves, and that'll complete this 3. Okay, so that's how you just work it. We're literally, that's why I'm calling the post tonight stair stepping. I really think we're stair stepping our way down. And you think, well, wow, it seems like, that would, it's going to take a long time to fill out and get 5 of these green square bracketed waves. Okay, 1, 2, there's going to be a big 3, and then a 4 and 5. Well, if we're breaking down out of this diagonal wedge as a first step in a breakdown, and typically when you break down out of these things, they go to the bottom of the wedge. Well, here's the bottom down here. Okay. It's down here. Here's where that started. This was the start of this wave. So if you're talking about breaking down around 15,000 or so, you get a lot of movement that can happen, and it can happen pretty quick. So, I mean, look how quick some of these moves are happening here. It didn't take long to break down this afternoon, and it did it pretty fast. So this is the way I'm looking. This is the wave count that I'm watching. I'm looking at the waves on an intraday basis because it helps me identify what's actually going on here. All right, if we take a look at the S&P 500, closing down below the 233-day moving average, closing below the August low. Okay, everybody talking about that. Everybody's talking about 1905. Well, we kind of blew right through 1905. And now we're in this potential area where there's some congestion. We'll just have to see what happens. Again, I'm watching the wave count to see what it tells me. Look on the New York Composite. This is almost to the minimum move of the double top. I mean, it's well on its way there. I don't see, for that indice, I don't see any support in here until you get down to, maybe here or here, past the minimum move. The NASDAQ, same thing, breaking down below the 233. Let's see, it's hard to tell where support's going to come in. If I had to guess, I would guess somewhere right around here, around 4,100, maybe something like that. And then you got to look at the the potential lows back in here. This is just April. I mean, this just shows you the kind of, what we've had a move. Well, it doesn't take long. I started measuring some of this kind of stuff, and I was looking at how quickly, I think I was looking at a couple of stocks the other day, and I thought, well, how quickly does this break down? And I was looking at it, and it seemed pretty consistent that, like 10 days worth of trading would break down 40 days worth of rallying, so it just doesn't take, if it took 40 days to rally up to this point, it only took like 10 days for it to break down. I was seeing like a 4-to-1 ratio or a 1-to-4 ratio, whatever you want to call it. Well, look at this. I mean, look, it sure didn't take very long to, if you look at this point right here, okay, all the way back, we just broke down and broke below the close of all of this trading. How many weeks? That's 1, 2, 3, 3.5 months, and we did it in probably a month or less. Okay, so that's the kind of activity that can happen pretty doggone quick, and it's already happening with a lot of stocks. The same thing on the Russell 2000. Everybody was getting excited today. We were all, well, Russell's bouncing, we're going to rally, and if you're playing the bounce on an intraday basis, if you're day trading it, it's great. Maybe you were able to play something, but it sure didn't hold. So we'll have to see. And again, this is breaking down out of this major top here. Okay, let's take a look at the indicator. Short-term trading index is right in the middle, not getting an extreme reading yet, and not getting, not even on the actual the index itself. We're not getting above 2 as a reading. If we get that, we'll have to kind of pay attention. Now, the VIX, look at this huge move on the VIX. We're not getting any divergence that says we're stopping right now. Okay, either on the blue, the DI plus, or the RSI. If I get divergence, it's going to be a sign that it's stalling out. We're not getting that. And look at this move. Okay, we blow it up. This move is huge and strong. And well, let me shrink it down so you can see it. It is reached the highest level all the way back for 2.5 years. Okay, back to these spikes back in mid 2012, and you could see what they did in 2011. That you can get pretty doggone high when some panic selling starts kicking in. So this is an indication of, yeah, this is breaking out. To me, that's what it looks like. High-low index, nothing. There's no bounce. It basically went sideways, almost the same number. So 427 more stocks hit 52-week lows today than new highs. Okay, so it's continuing to show very, very negative activity. All right, that's it for the market action. Again, what I'm looking for, what I'm expecting is a little bit of a pause, and then I'm expecting a fifth wave down, and we'll see how we'll have to watch the wave count to see how long the pause actually ends up being. I'm not expecting it to be very long. I'm talking about hours, and then we'll get a fifth wave down, and then again this 1-2 here was a sharp pullback. So once we get a third little I wave down here, I'll expect a sideways kind of consolidation move again, and then a fifth wave and complete this third wave. Okay, so we'll have a series of those, and we'll just watch them as we stair step down. All right, let's take a look at the 4 stocks that we've got. Let's start off with Pandora Media. We talked about this yesterday on Trade Ideas, so I'm not going to spend a whole lot of time on it. Okay, I had to pause the video there, so I'm back with you, and I apologize if I say something that I already said, but I know we covered this on Trade Ideas video yesterday, so I don't want to spend a whole lot of time on it, but it is breaking down. I'm still in half the position of the puts. I'm riding it. Now it is outside the Keltner channel here, and it started to try to rally, but again, when the market just sold off, these stocks just can't hold it, and the next support is right down in here. So that's what I'm watching for. It may bounce a little bit if we get a sideways move tomorrow. I don't know, we'll see. Let's go ahead and take a look at YELP, and YELP is again in a pretty solid little downtrend. It had a little bit of a zigzag rally move and consolidation more than anything else right now, but then the last 2 days has just broken right on down. I do think that YELP is doing an ABC correction after a big 5 wave move up. Okay, I think we're getting A, B, and this is a 3-wave B, and then when it broke that trend line right in here. So if you go by the measurement that typically on a zigzag, the minimum measurement I like to do is to say that C will equal A. Well, then you kind of go like this, bring it back to the end of B. Well, C doesn't equal A to all the way down here. Now, I don't know if YELP's going to go that far or not. I mean, there's no guarantee. Sometimes the zigzag will shorten itself. Sometimes it'll just, maybe it'll be right in here. We'll just, again, right now, the way these stocks are all tanky, you just don't know where it's going to go and how far it's going to go. All you got to do is take a look at Apache to know, that you have no idea how far something's going to go. YAHOO. This is one that I was really looking to want to get in, but I'm not going to get in now. I'm going to wait for a bounce. It broke this trend line. The 10 is below the 21. It is rounding over, but because this 21 is well above the 55 and it's above the 233, this is still aligned bullishly. That's why I'm a little bit wary of how I jump in here. So I'm going to watch to see how this plays out over the next couple of bars, and we'll see if we can, get something to enter on. And then the last one is Yandex, I believe, and Yandex this is one that I think I haven't looked at Yandex in a long time, and just haven't been paying attention to it, and I need to start. And I've got all these on a schedule now, and I'm going to get to all these stocks on a regular basis, at least every 2 weeks, in terms of rotating through and putting out on the videos. But this was like a little head and shoulders consolidation pattern in here, a classic. Now the shoulder wasn't as big over here as it was here, but it still looks like a classic head and shoulders consolidation. You can see how the 55 is below the 233 day. Okay, so the long-term trend is to the downside. The 21 is now breaking back. It's down, and the 10 is below the 20. Everything is aligned to the downside, and it's in a pretty strong downtrend here. Now, what about divergences on the indicator? Not seeing anything on demand, not seeing anything on DI minus, and not seeing anything on RSI. So, and again, I wouldn't be jumping in. I mean, I'm just looking at that to see if maybe it's going to pause and go down. But right now, it sure doesn't look like it's ready to stop either. So, all you can do is look. All I'm looking for, and I'll be looking for, is rallies to short. Rallies to short, because until we get 5 waves, back to this Dow thing, until I get 5 of these green waves down that completes a minor wave 1, okay, then I'm going to expect a minor wave 2 rally back up, and it'll be the classic 50 to 61.8% rally type thing. But we got to get 5 waves down first, and at least that's what I'm looking for and watching for. And so far, what's been very interesting about that is that every move down, like every one of these ones, this one, that one, that one, that one, they all had 5 waves in them. Okay, so it's all telling me that yes, this is the direction, and yes, we are looking for 5 waves, because all the smaller waves had solid 5 waves to the downside. And so anyway, that's it for tonight. We'll see what happens tomorrow. If we get another dramatic move tomorrow, I may put out a short market video just as an update, just as a check for tomorrow night. We'll see. I mean, if we continue to get these kind of moves, I'll try to put updates out as frequently as I can. So, all right, this has been Joe for Beyond the Chart. Let me look at my schedule real quick. I think I'm going to put out a video tomorrow, and tomorrow morning I'm going to try to on Apache, Caterpillar, Valero, and U.S. Steel. Okay, so those are the 4 I'll put out an update video on. I'll try to get it out tomorrow morning before the market opens, and we'll go from there. So everyone have a great Tuesday, and we'll talk to you soon.